Let's talk about these markets then in a few minutes. And I suppose overall risk sentiment being set by the tech earnings story out of the US. We see US futures looking weak as a result of that. I'm not sure to what extent that filters into other markets, but that seems to be the dominant narrative overnight.
Yeah, no, I think that's absolutely right. Everyone's going to be watching the earnings picture coming out of the US this week very closely indeed. It tells you a lot about AI, which I think has clearly been one of the biggest drivers for the S&P 500 over the last kind of few weeks and months, and will be kind of going forward. I think the other thing to kind of watch, though, today, obviously, we are getting some interesting comments out of Ueda in Japan with regards to the Bank of Japan's path towards higher rates. You know, they're looking very much at kind of sort of better growth prospects there, and I think Ueda in his press conference is being quite sort of hawkish, suggesting that they are going to have to raise interest rates in the next few months. So that's giving kind of the yen a little bit of a pop today, so kind of stronger yen, which obviously when we come to looking at some of the other aspects that have fed into that kind of tech frenzy, you know, thinking about the carry trade that relies on a weaker yen, that's not necessarily going to be something that kind of is as supportive to kind of giving those tech companies as much of a boost as maybe it was a few months ago.
So, Rachel, what is the haven right now? Is it still your traditional ones, your big tech, your Japanese yen, when this morning both seem to be very volatile and not where you want to be?
Yeah, I think the investors are having a lot of issues trying to figure that out. The Swiss franc is still pretty stable if anyone's looking around for things. But I think, you know, from the perspective of the market's thinking about where they want to be kind of going into the next week, there's not a huge amount of options out there. Obviously, you have kind of a lot of risk coming out of the US, so that makes treasuries a sort of slightly more risky proposition. When we look at kind of the UK budget, yesterday we saw the gilt market being very volatile indeed. You know, sort of the biggest trading range for 10-year gilts since March 2023. So bonds are clearly not something that are necessarily as stable as perhaps we might traditionally expect to see. But I think, you know, the kind of, you know, old school havens of kind of buying the dollar, that still probably is where people kind of land, you know, when the going gets tough.
Yeah, Rachel, talk to us a bit more about that gilt story, because during the budget yesterday, everything looked calm in gilt land and other UK assets. And then as soon as she sat down, we got information from the DMO and about debt issuance, and we got information from the OBR around inflation assumptions. And then we saw the volatility in the gilt market.
Yeah, I mean, she couldn't have done much more to really kind of nail the message in the actual budget, but it was really those kind of additional bits of information that provided context to it that kind of upset the market. So as you said, you know, sort of the debt plan, that's going to weigh on yields at the longer end, but also kind of this sort of suggestion from the OBR that because we're going to see higher inflation, that's going to mean that the Bank of England can cut rates less aggressively. So we did see kind of like yields really sort of rising as we kind of saw Reeves sit down, and that will be see how the market does now.